Overnight, traders are absorbing the ECB decision on interest rates. The regulator decided to put monetary policy on hold until four leading central banks, which recently dared to cut interest rates. The US dollar index rebounded after a decline early in the morning. The euro gave a negative response to the ECB policy decision. The euro has shown remarkable resilience to the US dollar these days. Early this week, the euro-dollar pair tested the psychological resistance level, but did not cling to it. The ECB decision announced today is the key to a further medium and long-term trend of the most popular currency pair. Following the policy statement, the pair sank below the medium-term support at 1.1240. The ECB decision not to cut interest rates disappointed investors, as they expected a reduction. Thus, the euro-dollar pair shed 0.25% instantly. The ECB introduced stimulus measures aimed at ailing business, which has been affected by the coronavirus epidemic. Meanwhile, demand for safe haven assets remains buoyant. The Japanese yen and the Swiss franc asserted strength against the weaker US dollar. The greenback fell earlier today as investors reckoned that the measures suggested by Donald Trump were inefficient to stamp out the virus. In this context, traders are betting on aggressive policy easing at the nearest Fed's meeting in March. Nevertheless, the US dollar index is recovering losses in the New York trade, having surpassed the level of 97. Dollar bulls are evaluating a weekly update on the US labor market. The number of initial jobless claims contracted suddenly last week. Further reports could be less positive, as they are likely to mirror the adverse impact of the coronavirus. Indeed, US companies have to lay off employees due to disruptions in supply chains and waning demand for some goods and services. Investors are stoking fears about the economic fallout from the epidemic, so the benchmark US indices are following the downtrend. The New York Stock Exchange was brought to a halt for 15 minutes as the S&P 500 tumbled by over 7%. At present, commodity currencies are the most vulnerable to the steep fall of oil prices. The Canadian dollar is trading firmly in the red. The US dollar versus the Canadian dollar pair has climbed to the level above 1.38. Technical charts do not signal a trend reversal. The loonie's trajectory depends entirely on developments in the oil market. Apart from the pandemic and risk-aversion sentiment, the loonie has been weighed down by the prospects of cheap oil supplies from Saudi Arabia. Amid the standoff with Russia, Riyadh threatened to ramp up oil production to record highs. That's all for now. Thanks for watching and stay tuned.